afternoon, everyone. It's been a long and interesting day that is the result of Roy's hard work over the last several months to bring lots of people together and cover a very broad range of topics today. I'm talking about how to put together your proposal for your green idea to attract funds to get the business funded and operating. Therefore creating a better future, hopefully. I don't think that governments play a big role in the environment. I don't think that government should be involved with regulating, penalising, taxing or encouraging environmental issues. I think that if it works financially, it will become popular. And what should happen is that the focus should be on making sustainable models that are profitable, and then the governments would have to try and stop people from doing them. In some instances, in relation to electricity supply, maybe government should open the doors and issue more licences to companies to allow them to develop their solar plants to supply to the grid. And apart from that, governments tend to regulate things and not do that very well, in my opinion. I also agreed with the gentleman from Bayer that I don't think that people will change their habits. We like to do the things we do. What we need to do is develop technologies that allow us to do them in a far more efficient manner. In relation to companies in Malaysia or in the balance of Asia or in the rest of the world, companies who aren't performing to the standard that Emerson have set with their internal efficiency aren't doing the best thing by their shareholders. Companies that aren't doing the best thing by their shareholders should be punished by their shareholders. The shareholders should be selling the stock. And that should be applicable in Malaysia, in Thailand and in Indonesia. Investors should be voting with their pocket and saying, we don't support your waste of electricity because you're wasting my money. I want my fraction of that as a dividend every quarter. Okay, on to financing a better future. If you have a proposal, and with some modification, I'd imagine this applies equally well to putting a proposal within an organisation to get a project funded, or putting a proposal to government to get a project started. You have to have an executive summary. That executive summary has to be very, very good. It has to be very, very catchy. It has to set out what the business is going to do, why it's going to work, and why you're the person to make it work. If I don't get through the business summary, and I've seen that some other people from banks and funds are here, if we're not caught by the business summary, we stop reading. That's the end. We're not going into the details. After the executive summary, you need a detailed business plan. That business plan should be as detailed as possible. Probably the worst reason to put forward a business plan is because you want to be rich. Everybody wants to be rich. I want to see a business plan that's going to be successful, that's going to build a successful business, and it's going to build a successful business in a fairly reliable, boring growth. I don't need to see huge growth rates over 2 years. I don't need to see that. I need to see growth. I need to see manageable growth. Probably the most important thing you can do when you're preparing the business plan is to be brutally honest. We're not going to make any money for 18 months. We're not going to make any money for 18 months. I'm going to need this much a month to live on. It'll be this much a month to pay the staff. It'll be this much to pay the rent. The more honest you are in that business plan, the better you will be received and the better partnership you will create with your potential investor. The business plan should answer these questions. They're fairly simple questions. They get forgotten a lot. Where's the money going to go? Who's going to spend the money? When am I going to get the money back? How am I going to be secured in relation to it? Am I going to be diluted during the process? These are all things that are very important to the investor or the lender. Executive summary should set out not a rosy-coloured picture, but a best-case scenario. We're going to start here, we're going to finish here, it's going to be great. You're going to make a lot of money out of this business. What's the deal? People sometimes have an aversion in relation to discussing the hardcore details of the funds, where they're going to go to. Set it out very clearly. If you set it out very clearly, in a very honest fashion, you'll get a good response. You may not get a yes, but you'll get a positive response and you'll be well received. That everything is on the table, and maybe the project will be recommended to somebody else who's more likely to fund a project of the type that you're presenting. Maybe they'll come back to you later, maybe they'll come back with a variation on that. Is it a great deal? This is a question you should ask yourself before you make your final presentation in relation to getting the funding, is to go through the presentation. If you feel that you have to try and sell the idea to somebody, it's probably not a great deal. A great deal doesn't need to be sold, a great deal just needs to be presented, because it's a great deal. So if you have that feeling that you really need to sell, and there's a lot of selling involved, it's probably not a great deal, go back and work on it again. The premium. If I'm first in and we have a high-risk venture, I like the venture, security's not great, I want a premium for being first in, and I want a substantial premium for being first in. And as a general ballpark, you could use something in the vicinity of 13 to 15 to 1. For every dollar I put in, I want $13 to $15 back. I want a premium on that investment. Equity kickers, options, warrants, lots of those things come into play if you are dealing with an exit strategy that's a listing. If you don't understand that before you go and make your presentation, you should get somebody who does, because this will be an important component of the final deal. If you don't understand it, you won't make a great presentation, you won't make a great deal, because this is part of the deal, and it's a very important part of the deal. So you should consult somebody, maybe us, maybe a securities guy at your bank, maybe a securities firm, and you should talk about how that structure is going to work, how that exit's going to work, what equities, what securities, what options, what warrants are going to be used to create the exit strategy. My suggestion is you know that before you present it, rather than present it and have the person you present it to come back and say, let's do it this way. That may not be a great deal for you if you allow that to happen. So the exit strategy is very, very important. The exit strategy will affect your return on investment as well. So take the time and spend the money to have an understanding of what that exit strategy is, what it's going to look like, and how it will work. Warrants and options. Okay, tax and legal considerations. Every day I have proposals that are going to make me millions of dollars, I'm told. It's not always true. Majority of the time it's not true. If one of those projects is a valuable project that is going to make a lot of money, the very first thing I look at is, where am I going to domicile this business? Am I going to do a BVI with a Hong Kong listing? Am I going to do a Bermuda company and try and get onto the OTC QX? You have to pick your domicile for taxation. You have to pick your domicile for legislation, which may lead you to have 2 domiciles to protect your IP. Then you have to pick the domicile, the exchange you want to exit on, and that will have a great impact on your valuation. Different stock exchanges value different companies in a different way, and it's a good idea to have an understanding of that. Dilution, again, dilution's always a big factor. The first round is never the last round, unfortunately. The first round goes in, things happen, there'll be a mezzanine round, there'll be a third round, there'll be a final round. You could lose 80% of your net position in the company by the time you actually get to market. Many investors, many inventors have actually lost control of the business by the time you get to that last stage. Okay, in closing, there's a 15-page guide that I've prepared in relation to getting your business together to look for venture capitals. You can download that at asianaffairs.com. You can email me with any questions you have at shayne@ebelingheffernan.com. You can contact me on that phone number. Every day during Hong Kong market and New York market, my live trading notes are published on livetradingnews.com, which I'm pleased to say is now Asia's most read financial news site. And that's all from me. Any questions, you can contact me and download the guide at ASEAN Affairs. Thanks again.